Hi guys, welcome to Money by Sunny. Banks are one of the most important and influential institutions in our society. They are also one of the most mysterious and notorious. We entrust our hard-earned money to them, but do we really understand what's going on behind those closed doors? Here are 7 shady facts and scary truths about banks that will surprise you. Number 1, they spy on you, kind of. You probably know that banks keep records of all the money that comes in and out of your accounts. But did you know that banks also keep records of all the transactions made by your credit or debit cards? It's true. We all know that banks record when and where you make purchases using your card. Banks then use that information to figure out what kinds of offers to bombard you with. For example, if you buy a lot of electronics at big box stores, that kind of information is really useful for banks. You can then expect to get more offers for credit card deals on electronics. It allows them to make more money by encouraging you to spend on things you may not even need. The more sophisticated banks will even push real-time sales offers to you when it thinks that it has a good shot at making more money from you. I guess it's a reality that nothing is private in today's information age, but it's still not a nice feeling to know that you're constantly being monitored. Number 2, they pay super low interest rates. When it comes to banking, most people think of a safe place to store their money, earn some interest, and be able to access it when they need it. These points are all true. What many people don't realize, however, is that the interest rates offered by banks are typically much lower than the rate of inflation. This is great for banks, as they are able to borrow money from the public and pay very little for the privilege. These low rates mean that the money you have saved in your bank account is actually losing value every year. On paper, you'd be better off spending that money on necessities now. Of course, the reality is that some savings is a must-have, and you certainly shouldn't spend everything you earn. However, keeping all of your money in savings is a good way to the poorhouse, as inflation will chip at it and gradually erode it every year. Instead, while your emergency fund should be in a savings account, the rest of your money should be put into investments that will give you a good shot at beating inflation and growing your wealth. Number 3, they love charging high fees. Banks are infamous for their high fees, which can really add up over time. Whether you're talking about monthly checking account fees, overdraft fees, or ATM withdrawal fees, banks can charge a lot of money for the services they provide. Did you know that in 2020, banks in the US earned a crazy $12 billion on overdraft fees alone? I guess it's not so surprising when you think about it. Each instance of an overdraft usually results in a fee of about $30 being charged to the customer. Banks know that it's so easy for people to forget to keep their checking accounts funded, so this is a cash cow for them. Don't fall into the same trap. Make sure you monitor your account balances, especially if you have auto debits or auto payments for bills. These can easily cause your account to become overdrawn. Banks can also charge you high fees for managing your own money. For example, the bank may charge you a fee for withdrawing money from your account, using counter services at a branch, or for using a debit card. The bank may also charge you a fee if you do not keep a minimum balance in your account. The fact is that banks just love fees, since in contrast to a loan or a credit card, there's almost no risk to the bank, and it almost amounts to free money for them. Number 4, they encourage you to get more debt using rewards programs. You open a credit card to get a rewards program, and the bank is happy, because now it can potentially charge you interest on the money it's extended to you. Meanwhile, you're feeling pretty good because you got a free flight for signing up for the card. Unfortunately, this is often the beginning of a dangerous cycle in which you use credit to get free stuff, which makes it more difficult to save and grow your money. Eventually, the bank is hoping that you will carry a balance to the next month, which is where that high interest rate kicks in. And once you start carrying a balance, the bank will do what it can to encourage you to continue doing so. Now, cards rewards programs can be great, especially during periodic offers, where you can get great discounts on your purchases. However, being indebted to a bank in order to get a rewards program is never worth it. I'm sure we can agree that it's better to save up for what you want, rather than pile more debt on just to get a free flight. Number 5. They aren't great at keeping your data safe. Banks are certainly not what they used to be. This is not necessarily a bad thing, since modernization is generally positive. In the past, people would go to their bank to deposit and withdraw money, and maybe talk to the banker about a loan. Now, however, banks are repositories for our data. We deposit our money, but we also keep our passwords and other sensitive personal information with the bank. This creates a serious security risk. In short, banks aren't the best at keeping data safe. They have been hacked countless times in the past, and they are likely to be hacked again in the future. Since banks tend to have hundreds of thousands or even millions of customers, a single hacking incident or a breach can result in the theft of a large number of customer records. This can range from personal information, such as names and addresses, to user IDs and passwords. And if you're like many people out there, you probably recycle your passwords across multiple accounts, such as your email, social media, and others. Well then, this breach becomes even worse, as the hacker is now probably able to access your other important accounts and create even more havoc. Number 6. They gamble with your money. When you deposit your money into a bank, you may think it is safe and sound. But did you know that banks can use your money for their own purposes? Of course, they can use your money to make loans to other people, which is kind of the main point of banking. Meaning to say, to act as an intermediary between people with excess money available and people or businesses that need to borrow money. But apart from this traditional form of banking, banks can invest your money in risky investments, such as stocks and bonds, or even more risky instruments. If the bank fails, your money may be lost, as the world found out during the global financial crisis in 2007. At that time, many banks had huge sums of client money tied up in a particular financial instrument called collateralized debt obligations, or CDOs. These were linked to the value of mortgages, and when the housing market tanked, so did the CDO, and so did a lot of customers' money. Of course, regulations have been tightened in the last decade or so to try to prevent a reoccurrence. But if past behavior is any indicator, banks will find a way to sidestep these in the search for higher and higher profits, while taking on more and more risk. Number 7. You only matter if they can earn decent money from you. When it comes to banking, there's always a lot of talk about customers being valued and important. But dig a little bit beneath the surface, and you'll find that banks really only care about one thing: making money. For example, banks may talk about how they offer a variety of products and services to help their customers. But the truth is that these products and services are designed to make money for the bank, not to provide a useful service to the public. And if you're not profitable for the bank, then you're not really important to them. Banks also like to tout their customer service, but the fact is that they are often terrible at it. This is because their primary focus is on making money, not on satisfying or delighting their customers. At the end of the day, customer service is an expense, not a profit center for banks. Of course, if you happen to be a high net worth customer, you'll probably be treated like a king or queen, because you're probably paying the bank big fees or interest. But otherwise, the sad fact is that if a bank doesn't see dollar signs every time they deal with you, they're not going to give you the time of day. So there you have it. I'm sure these 7 shady facts about our banking institutions raised a few eyebrows, and will hopefully help you do your banking with your eyes wide open. If you like this video, please do subscribe and leave us a like or a comment. See you next time on Money by Sunny.